There's a little secret property investors have. It's called negative gearing. In today's video, we're going to be unpacking the secrets of negative gearing and why the government might be looking at scrapping negative gearing in the near future. Is this going to tank the property market? Will your cash flows suffer significantly? I can think of a lot of people out there, the business owners, the crypto bros, the politicians, the surgeons, people that use negative gearing might be shaking in their boots at this point in time. So what is going on? Are they going to remove negative gearing? And what is negative gearing to begin with? Essentially, all it is if your property has an income and expenses, and the expenses outweigh the income, you can take that loss and apply it against your day job income. So this essentially allows high income earners, or anyone for that matter, to reduce their taxes. Now, a lot of people will say that policemen and teachers and the everyday Australian who's an investor uses negative gearing, but the people that get the biggest advantage are the very wealthy and the high income earners. People earning $300,000, $500,000, $1 million plus a year, they're obviously going to have far more advantages of negative gearing. Rather than having to pay 50 cents on the dollar, they can hold a $3 million property, investment property, and then buy multiple properties and claim those tax benefits. Now, whether that's good or bad, it's just the system that we currently live in. I don't think that these people are doing anything wrong. They're playing within the rules of the game. And so you need to understand the rules, and then you need to work out how you can take advantage yourself, because you're so unlikely to be able to change these macro policies that are in place. Now, why is negative gearing so controversial? Most people who are against negative gearing have some key points: that investors are overtaking the market, that they have an unfair advantage, and that it also hinders other home buyers trying to break into the market. On the flip side, some of the arguments for negative gearing are that it does stimulate investment into the property market and create more rental stock. It's essentially encouraging investors to put their money, put their capital, tie it up into a property and make it available for rent. And in some of these cases, the yields some of the investors are getting on these properties are ridiculously low, like a 2 to 3% gross yield in Sydney, for example. Now, this is not new news. There's been talk in the 1980s and 1990s and 2000s about scrapping negative gearing. I don't think they're going to scrap negative gearing. It would cause major disruption to Australia's property market. Now, I think there are some things that they could tweak when it comes to negative gearing, like they're proposing a negative gearing cap. So say you make a $100,000 loss in a year, that you can't claim more than, say, $100,000 of losses in a year. But wealthy investors are going to be able to get around that. They're going to buy in company and trust structures. They're going to use different vehicles and assets to control and build their wealth. So some of these caps can hurt mum and dad investors who are trying to get ahead, and these very high net worth individuals and families can really use tax advisors and planners to navigate around issues like negative gearing. Now, what would happen if they just made a clean scrap of negative gearing? I think we'd see an exodus in the property market. A lot of Sydney and Melbourne property prices would crash, in my opinion. We'd also see that in Brisbane and Perth, especially in the higher end price points. Where properties are $1 million plus, those are going to be the properties that suffer the most if negative gearing changes. That's because those investors who buy $1 million plus homes and have debt attached to that are going to be seeing less benefits, and therefore they may sell out of those markets to release their capital. This would then reduce investor activity and actually hurt rental prices. What you'd expect then is if there's less rental supply and there's still growing demand of renters, that there's going to be less properties available, and this is going to only impact rental affordability. There'll be more pressure on rental prices, making it difficult for renters. Now, some people will argue that because more stock comes back onto the market, that people will be able to buy in, and some people will, but some people won't be able to buy in. Some people may not have the incomes or deposits or serviceability to break into the market, even if we see a crash in property prices if they did scrap negative gearing. So there's been uncertainty when it comes to what's happening around negative gearing, and it's been in the political space this year in 2024 as a key discussion point. And if the government did pass an adjustment to negative gearing, I don't see it being a major change, because that could potentially tank property markets and cause a lot of instability. And what a government doesn't want is instability in Australia's property market, because property is one of the key things that underpins Australians' wealth and gross domestic product. So they're going to want to keep property safe as houses, as it were, and not rock the boat. So what do you think? Do you think negative gearing should be scrapped? Should they put a cap on it? Are you concerned about some of the changes that negative gearing might make? In my opinion, Emily and I aren't worried if they change the negative gearing. We've always taken the view that we want to balance our property portfolio. Some might have negative cash flow, and we have received negative gearing benefits from those properties. But also some of our properties have positive cash flow. And we also look to use company and trust structures to give us flexibility in distributing income and managing our wealth. So it's about taking a holistic view. Obviously, I have a background as a chartered accountant with CAANZ, so that does give me a little bit of advantage when it comes to the numbers. But take a look at your own numbers, break down your positive and negative gearing on each of your investments, and look how you can optimize throughout that journey. If you're looking to buy a property here in Brisbane in the next 6 months and you want me to break down your numbers and take a look at the positive or negative gearing and the next property steps you should take, then head over to purposeproperty.com.au. We'll sit down, have a chat, talk you through our process here at Purpose Property and leave some time for some questions. Otherwise, I'd love to hear thoughts in the comments below. Where do you think negative gearing is heading? And is the property market going to crash if they make any changes? Drop a like on this video, subscribe to the channel, and click this video over here for more things real estate, renovating, and financial freedom. I'll see you in the next one. Peace.